You know what I
You
like
did.
though?
I mean, I
No,
don't.
I said I like to win and I like to earn money and I will do whatever it takes to win and earn money. I didn't say I like to be warm and fuzzy. That's
I
not two faces. This is me straight up.
If you're not getting educated about local and national real estate market conditions, whether you're an agent, you're in mortgage, title, finance, accounting, or you just give people advice, you're doing yourself and your client base a disservice. This is the Knowledge Brokers Podcast. I'm here with Byron Lazine and Lisa Chinatti. I'm Tom Toole, and I know you were all glued to the TV sets Sunday night, guys, watching Jerome Powell on 60 Minutes, and I found that to be a very insightful interview. I like 60 Minutes. I think it's one of the better news shows out there. And there was a couple key takeaways. So I'm going to lob them up to you two here, and then we can unpack it a little bit. So one of the first things that Jerome Powell said is with the economy strong like that, we feel like we can approach the question of when to begin to reduce interest rates carefully. We want to see more evidence that inflation is moving substantially down to 2%, was another comment. And we'll update the outlook at the March meeting. I will say, though, nothing has happened in the meantime that would lead me to think that people would be dramatically changing their forecasts, noting that the time is coming for cuts, but perhaps not yet. They mentioned their beautiful retreat in Jackson Hole, Byron. What a nice place to go, huh? And he felt that the policy tightening would cause some pain, which I think it really has. And you know, it was kind of more of the same from Jerome Powell. Seems like we're not going to see a rate cut in March. What did you guys think of the interview? What did you think of his comments after the Fed meeting? Let's talk more about that, and then we'll jump into everything else.
One, I'm glad Lisa Chinatti's finally joined us back here on the pod.
Oh,
So hit
it's
the
been
thumbs
fun.
up. Hit the thumbs up for Lisa coming back. We're all pleased to have her back. And if you're a BAMX member, you got the show notes on this entire 60-minute transcript, and Vanessa did a great job pulling out all of the questions that were asked specifically about housing. The one that stood out to me the most, wasn't when they were asking about, can people afford a mortgage? He doesn't care if people, Jerome Powell does not care if people can afford a mortgage. He'd rather see them rent because it'll help him stabilize prices.
Mm-hmm.
So remember, it's the mandate from Congress to the Fed is stabilize prices, maximize employment. So that's a short-term game. It's not, hey, are people going to own homes long-term? He doesn't care. Okay. But what he did say what was interesting about the future of commercial office buildings. He doesn't believe that we have a larger issue on our hands. He said they learned from the bank crisis we saw a year ago. The problem appears to be manageable. These are things that he said, and they doubled down. You believe this is a manageable problem? It appears to be so, is what he said. Well, since that 60 Minutes, you had Janet Yellen this past week talking about non-bank mortgage companies could be in trouble. Just over 50% of loans in 2023 were done by non-bank mortgage companies. That, like an example of that would be, Guaranteed Rate, Rocket. Those are some of the bigger ones.
Mm-hmm.
But you may be working with a smaller non-bank mortgage company in your local market. Those are just some of the bigger ones. Loan Depot, I think, is one of those, Lisa, right? Loan
Yep.
Depot would be one of those examples. Nothing against those banks, but that's, I think Rocket does the most loans in the country. So it makes sense that non-bank mortgage companies are doing over 50%. And they're putting the caution flags out on that particular mortgage lender. And there also is already a caution flag. And this is what Powell was asked in the 60 Minutes on regional banks who are holding up the commercial office buildings across the country, most of them being local. The bigger banks don't have as much risk to these office buildings as the local banks do. I'm still concerned about that because if you mark to market these office buildings across the country, they are all valued significantly lower than what is on these banks' balance sheets. But Powell says he doesn't believe it's a problem. And the big statement is, and it's the way he said it. So if you read the transcript, the line is, I don't think there's much risk of a repeat of 2008. The way he said it, he said that with confidence. And I do believe that, especially from the residential side, our side, to me, there's really no risk of a repeat of 2008. When you look at residential, it would only be in those commercial buildings. Those are my big takeaways. He looked like a prisoner of war. in that interview, but I thought he did a decent job overall. Lisa, what do you got?
Yeah, my big note was about the question was, does he see prices coming down? And he was very clear that he doesn't see prices coming down across the board. Maybe some small things, but that prices are at a point where they are maybe stabilized after the massive increases that happened throughout COVID. But there's no signs that, I think, especially on the housing side of things, that we're going to see a massive crash in prices either. So
And
that was one
I
of
mean,
my big takeaways.
he was talking about things like milk or eggs. Like there's
Yep.
now a new, he didn't use the word floor. What was the word he used there? A new
I'm looking.
pricing floor, I think, is the wrong word. Janet Yellen said it again this week. Like, but she also said prices don't need to come down because wages are going up. I think there's a lot of folks across America, working day folks, that would disagree with that. But there's basically a new pricing.
He
It's
said,
not
yeah,
floor
overall price level doesn't come down. It will
level.
fluctuate, and some goods and services will go up, others will go down. But overall, in aggregate, the price level doesn't tend to go down except in fairly extreme circumstances. So,
Yeah. He pointed towards gasoline as something that has come down.
yeah.
Because
And yeah, I was going to say, and cars was one of the other big ones that he spoke about. And the things that kind of led up to it were very COVID specific, where moving to the suburbs and needing to not rely on public transportation, it legit points in some of it.
yeah, the price level is a good point, right? Like once a business gets used to, okay, we can charge this and maybe we're not going to have this rapid increase anymore. This inflation isn't
Right.
going to continue, and we're going to kind of let the market obviously catch up to this new level. That's very relatable to a home, because once a home buyer becomes the home owner and they've bought in at a certain price, when it comes time for them to sell, they're not likely to sell at a loss when they put it on the market. They're going to want to
Right.
place the home on the market for higher than they paid for it. So the last couple of years have created a new level. I think that's most of our beliefs is that we're in a new level of home values across America today.
I think
Yeah.
that's a great point. I mean, I don't, we're not going to, you look at just like what $200,000 is not even like a touchable price point in our marketplace in the suburbs. Now it's like 300 is the new 200 in a lot of cases. I see Lisa nodding, you're in a similar market. So
Yeah.
that's a really great point. Byron, about this office conversion. So Lance Lambert did a really nice job breaking this down on the Resi Club, where in 2021, there was 12,100 units that were going from office to apartment conversion in the pipeline. That number's grown to 55,300 in 2024. And it's a lot of big cities that are seeing this. Washington, D.C. is number one. They have an 88% change year over year. New York's number two. They've got an 18% change year over year. Dallas, Texas, number three. Chicago and L.A. and Cleveland round out the top six, having over 2,000 units going to apartment. And there's 150 billion in office mortgages due by 2024. So this is something that I think is going to be interesting to watch. I know our good friend Doug Edrington, he's had people convert. He's working with a builder right now that's converting a lot of stuff into like sales and doing the same thing. So you're seeing some of these. I'd be curious, like they're apartments, which is the problem. But if someone would go in and develop these and create actually like affordable housing in there could be an opportunity. I just don't know how realistic that's going to be for a lot of these owners of these buildings. But I mean, that's a big jump. I mean, you're seeing 12 to 55,000 in major cities.
The percentage is a big jump. I think 357%, but it's coming off of basically nothing.
I agree. Yes.
And if you dig in a little bit further, because when you see the 357%, you're like, whoa, is this a trend to keep an eye on? I think it's early stages to keep an eye on. But when you dig in a little bit deeper, like Lisa, Boston's on. I think Boston was on the list. No, they're not actually.
Boston's not on the list. Philadelphia has 975. Like it's not very many. So
when you dig in further, like Manhattan, for example, is on the list. So Manhattan was, or maybe Manhattan's not in the top 25, but Manhattan has.
No, New York's number two. They had
Okay,
an
they're number 2.
8%
All right,
change year over
what was
year.
their number? 5,200. So 5,200, but one building is making up 1,200. 25
Mhm.
Water Street. So one building, two buildings in a city can like skew the numbers so much. I think we're a long way away from this saving the commercial office building sector because it's so expensive to do. So there might be some low hanging fruit for developers to take an opportunity in a low inventory environment where they're like, okay, this building I can easily do, but the majority of the buildings, from what a lot of developers have said anyways, it's going to be very cost restrictive, which means they'd be in the luxury, whether an apartment or condo category. And we know that we don't need that much, luxury as much as we do affordable, to your point, Tom.
Well, it's also the construction costs of these buildings. I mean, you look at, I used to live in a converted loft, right? It was on a warehouse. Like the amount of soundproofing that needs to get done. I mean, these buildings aren't constructed to be residential. So you may think, oh, the building's there, you can convert it. It's way more expensive than people realize. Lance's big takeaway is it's just a small segment of the market right now. I think more the debt is the issue here that we need to keep an eye on. I'd love to see more housing units come to the market, but that doesn't look like that's going to be in the cards here.
Since April, we have uploaded new and sought-after courses, content, and tactical assets for your business into the BAMX platform, not articles behind a paywall that only pontificate to you what you should think and do, but education that actually shows you how to do what you need in today's market. Every day, we continue to add more content into BAMX and our private Facebook community. Content that works, content that our members have exclusive access to daily. It's why over 1,500 of you and climbing have joined us in BAMX. It's also why tomorrow's price is guaranteed to be higher than today's. That's called inflation. Do not wait any longer. Use code Byron and join the thousands of agents taking their business to the next level today. Code Byron for 10% off. See you in BAMX. We know that in 2024, your business operations will be more important than ever. Once I figured this out, my business was able to scale and take off. See, generating leads is one thing, but getting that deal across the finish line while keeping everyone happy is another story. Enter Mosaic, everything you need once a lead becomes a client. Mosaic picks up where CRMs leave off to streamline the client experience and maximize your productivity. It's the operating platform that gives agents and teams everything they need to stay organized and proactive throughout the entire transaction process and beyond. Transaction management, forms, AI-powered collaborative search, client retention capabilities, and advanced analytics for your business. In other words, you can use Mosaic to create a powerful flywheel for your business. It will help you close every deal, boost your profitability, and generate more repeat and referral business. If you need a better way to run your business, check out the link below and learn how Mosaic can help you today.
Yeah, well, I mean, it all comes down to the inflation data. By the way, just this morning came out that December was actually lower than they revised it. So as long as that continues downward trend, we could get rates sooner than later, which is what we need for the housing market to obviously unlock.
I still don't think it's going to be March, though. I think he was fairly transparent that
It's definitely
May
not
is
going to be
the
March.
earliest, which is interesting, right? Because there were a lot of predictions about 2024 being the year of the fives, 5% rates, 5 million sales. I don't see it.
David Childers made this statement this week on BAM Pro Bowl, the year of the fives, and I did push back on it a little bit. I'm like, okay, well, here's where we have to be careful on communicating. I love David. I love Keeping Current Matters. He does a great job. And his point is have a position, stand behind it. He's standing behind his position. The problem is when you say the year of the fives, the 5% rate, but then you dig in and it's like, well, I think by the fourth quarter, we'll be at 5.8. Oh, that's really the year of the six to me. That's really the year of 6 plus 30-year fix on the interest rate, not the year of the five. It's like, okay, if in December we get to 5.8, does that make it the year of 5% interest rates? And 5.8 or 5.9, by the way, is really still 6. So, I think we're still a long ways away from it. We hit 7, earlier in the past week. So we're still in the high 6s. It's why I'd encourage buyers, you're going to cost yourself more money waiting 12 months. because homes are going to be more expensive. That's the data that we have, especially if you wait till the end of the spring. We have 25 years of data that shows you buying at the end of the spring is more expensive than the beginning of the spring. So get out there now, because what I think is more of a guarantee is that home prices are going to be lower today than they are in the theoretical tomorrow, in the future, in the later half of the spring market or the year. That's more of a guarantee than saying that the 30-year fixed is going to be lower. So if I'm looking for more certainty, it's that buying now is a lower price tag than buying in the future. And I just can't predict that 30-year fixed as easily as I can with 25 years of price history.
I think the other side of it, bringing it back to the agent side and what should agents be doing, I believe strongly agents should be generating as many leads as they can now, because I think that the buyers that are going to be positioned to take advantage of it when they do fall to whatever that rate is are going to be the buyers that have started looking now. And I think for agents who wait to start generating leads when the rates go down, I think they're just going to be too far behind the ball again.
And I love that feedback. I think, Tom, you and I talked about it a little bit last week when Lisa ditched us, but go back and listen to that interview I did with Sirhan. About 10,000 of you have done so already, where he talks about just value-driven follow-up, like just continuously over and over and over again, not expecting a response, send them new, because if they're further out, to Lisa's point, collecting a lot of leads, and you just every single week, don't know if you saw this in your search, but it came across my desk and I thought of you. Here's a recent sale. Here's a change in the market. You just keep every week sending it off. That when they are ready in a year, when the rates do come down to a point that makes sense for them, and you've done value for 52 straight weeks, you'll be the agent of choice. You'll be top of mind. It's hard not to be. You've just given so much over the last year or 18 months.
I talked about this yesterday at one of our meetings. We have our listing conversion workshop that we run here, and it's exactly what you said. You when you follow up, you got to think help first, sales second, right? Like that's really what it is. I had a conversation with someone I met 5 years ago this morning on the way to the office. I'm still thinking about moving, not sure what I'm going to do, right? How many times have you heard this? She maybe is going to downsize or whatever else. I sent her a video CMA, the CMA a day. Like, this is one of the easiest things agents can do. And I got a new bonus hack how to do this, Byron. You'll like this. I was watching a Jimmy Burgess video. We all know Jimmy here. He takes a Google Earth picture of the house and puts his face on it to get him to open it up and click the link, which I thought was genius. with Bomb there. And then just sending like 2 minutes of, hey, here's what's going on in the marketplace. And had a conversation with this woman again today. Hey, I'm 4 to 5 months out. Thank you so much for the information. I said, hey, no matter what you need, even if it's like a contractor referral or you want to get some work done on your house, just call me. It doesn't have to be about sales. And when you have that kind of mindset, and you really got to mean it, like it can't be some BS thing that you're saying. And we constantly give out contractor referrals all the time. That's the kind of follow-up that's going to get you business. And then when you do the things like a Popeye, or you're talking to your people long-term, just building that relationship, then you get like the come list me call. But it's because of sustained activity over time. Most agents listening right now aren't talking to enough people on a daily basis. They're not letting them know what's going on in the market. So Sirhan said it. I mean, he has no expectation. He just constantly value. It's the Gary V playbook.
No expectation, knowing that you plant enough seeds, there's going to be a certain amount that
agreed,
sprout.
Yes.
Lisa, we all know the answer to this, but the biggest mistake, Lisa, that when agents hear what Tom just said, a consumer says, I'm 4 or 5 months out. What's the big mistake that we as agents would make when we hear that? And I mean, what's the too often mistake being made for agents when they hear 4 to 5 months out from buying?
I think we're just not following up enough and keeping the cadence in. And I think it's like when you come from a place of just wanting the sale and only touching base when that consumer is about to transact, it's too late, right? It's kind of like Tom said, valuable contact at really tight cadences of time, but not just to see if they're ready. And it's something that...
Yeah, go ahead. Sorry.
No, go.
I was just going to say, Tom, we can role play this thing out, right?
Let's do it.
You hear 4 to 5 months. Hey, I'm 4 to 5 months out. Would you be offended if I kept you updated on the market over the next 4 to 5 months? Would that offend you in any way if I sent you new listing data and market report data? I mean, that's an easy opening for anybody's. No, I mean, I wouldn't be offended by that. That wouldn't offend you if I kept you updated on the market during the 4 to 5 months, so that when you get ready to buy, you're the most educated buyer in the market that can secure the lowest price because you know more than 90 or 95% of the buyers out there. Would that offend you in any way? Of course, people are going to say, absolutely not. Yeah, send it to me. You got my permission. Hey, I want to double check I've got the right email for you. Right. And now you can send them stuff on email. You send them stuff on text. You can call in periodically on the 4 to 5 months. If you're sending value over text and email over a 4 to 5 month period, guess what you've just now also been granted permission to do? Drop in on a couple of phone calls over that 4 to 5 months. Hey, not expecting a response at all, Lisa, just making sure that you're getting those. I'm not going to spam. I thought of you when I sent that property. So just wanted to make sure that you're actually receiving those. Okay. And if you're not, we make sure we make an adjustment here, right? You've got that opportunity to now just reach out and make sure that the help that you're providing is hitting home.
Yeah, I also am one of the things we were talking about, we had our inside sales team meeting yesterday. And I think kind of tying into that, I'm less bullish on email, interestingly, and leaning more into, we all talk about this all the time, notes about the human, right? Take it out of all the, even just market updates and stuff. But Tom's smirking, but I'm also
I have a follow-up point that's excellent to this. So keep going.
Okay. And I've been saying we bought note cards for all of our inside sales reps and our agents. And I'm saying drop a really nice handwritten note, replace the email with a really nice handwritten note in a note card that looks like you really want a relationship as opposed to just a transactional thing. I think email are great. Market updates are perfect, but I think it's got to be a deeper human to human connection.
Lisa, were you big on the notes in middle school, passing the notes to your favorite friends, your favorite guy friends?
Strike you as the warm and fuzzy type that likes to write notes? I mean,
well, you just said
what I like
did.
though?
I mean, I don't.
I said I like to win and I like to earn money, and I will do whatever it takes to win and earn money. I didn't say I like to be warm and fuzzy. That's not two faces. This is me straight up.
I used to be a big time note collector in my 6th grade days.
Yeah, you were.
Tough guy over here, Mr. Popular.
Exactly. Doesn't wash his hands.
Yeah. So Lisa,
you have to get to the pod.
Disgusting. Lisa, you said something here, and Byron, it's exactly what you're talking about. I got the chance to listen to Steve Passanelli, the CMO at FUB and formerly of BombBomb. I think you guys know him. Josh Rubin really offended him on a call we did one time. If you guys remember that, it was excellent. But Steve, very smart guy. And there's 3 reasons why people want to hear from you. They want emotional value, like what you're talking about, Lisa. They want insight value on maybe what's happening in the market, or they got a question, or they just want tangible value where, hey, here's what's going on in the market. Would it be offensive if I sent you sales data in the marketplace, Byron? And that's why people want to hear you. And that really resonated with me because people do care about the human connection, even if like, hey, I'm getting, surgery in the next couple of weeks, and you call, and instead of the intro of the call is, hey, are you ready to sell? Which is a horrible question to ask. It's, hey, how are you recovering, Lisa? How's everything going? And just
or how about a get well soon card?
Yeah. Hey,
that's my point.
Hope everything goes well. I write handwritten notes all the time. I mean, that stuff does work. But the point is when you actually ask them what's going on in their life, and and when you do really care, I mean, how many times do we deal with a distressed situation, like somebody dies, somebody's getting divorced? These are reasons why people move, unfortunately. And if you can have real empathy and all two-faced joking aside with Lisa, asking people how they're doing, having some sort of emotional value, and don't even bring up real estate, that can go a long way, but you've got to really mean it, right? Like we did some Popeyes this week, thanks to Karen Peters. We do like 6 packs for the Super Bowl. Dropped them off. We got a come list me call, but I wasn't looking for a come list me call. It was one of our best clients that lived 5 minutes from the office. I know the guy likes beer, and it was like, hey, enjoy a 6-pack on us. Happy Super Bowl Sunday, whatever. Hey, Tom, I couldn't believe the timing on this. That was so nice. My in-laws need to sell their house. Like literally, like that's the email. But that's after inviting him to Santa Claus photos. That's after seeing these people over and over again. I sold their home in 2014. That's what we're talking about here. But emotional value, insight value, tangible value, super, super insightful. Think about that when you're following up.
I love it.
All right, let's move on to the next one here.
I'm waiting for my Super Bowl drop off from Tom Toole, but
I'm not coming to Florida to drop off a 6-pack of Miller. I'll Venmo you the cost of the 6-pack, and then you probably won't drink it anyway. So that'll be fine.
I don't really drink beer.
Beer hurts my tummy, so I understand. So speaking of hurting my tummy, right? The NAR made some news this week. Kevin Sears. This is the first insightful comment from someone at NAR in, it feels like, over a year. Kevin Sears, the new president, he came out and he was at he talked about the U.S. Department of Justice and the DOJ investigation could be a bigger problem for brokers and agents than the Sitzer-Burnett case. I found that to be pretty insightful. I got a lot of questions about this. Byron, you're our go-to on this. What do you think about these comments from Kevin Sears?
Yeah, I mean, I think he did state the obvious. I guess it was. I'll give him credit. It was refreshing to hear somebody from NAR say something without a teleprompter in front of them. I don't know. Everybody from NAR seems to have taken, classes from the Joe Biden candidate cabinet where they just can read off of a teleprompter. Every time they put out a video, it's a
Joe Biden can't read off a teleprompter. Who are you kidding? I mean, is this for real? Like, come on.
I'll say bad things about our president. But he said some stuff off the cuff there. It also happens to be obvious, but it comes with no solutions. That's the problem. Agreed. Where NAR is falling down right now. As much as I've been critical of NAR, there's still a hope that they can, do some things. James Dwiggins made a recent comment about, if we've got any hope to get Fannie and Freddie lobbied to, because what Tom's talking about, just to go back a second here, what DOJ wants to change is the ability for any MLS to be allowed, it'd be illegal to say we're offering X comp to buyer brokers. That's essentially, in a nutshell, what the DOJ wants. We can get into the whole history of, okay, there was a settlement, now they're going to come back or whatever. But that's in a nutshell what DOJ wants. If that world were to happen where it'd be illegal to offer compensation, James Dwiggins, I believe James is Washington based. He's a broker owner, Lisa. Do you remember where? I think he's in Washington. I think he's in the Pacific West Coast somewhere.
Pacific Northwest somewhere, yeah.
He's in the Pacific Northwest somewhere. And so James, he's really smart and well-educated on this stuff. And he said, if we've got any hope that Fannie and Freddie, the big, Fannie and Freddie will allow buyer commissions, buy side commission to be financed into the deal, NAR is likely the only ones that have a shot at lobbying. That's a move that could win back a lot of hearts that have been broken by NAR over the last couple of years if they were able to pull that off. James Dwiggins made that point. I'm going to give him all the credit because there's some media companies out there rolling out some really pathetic faces when it comes to this lawsuit that could be getting the industry in deeper trouble. James Dwiggins is not one of them. I respect his comments quite a bit. And he's somebody who's smart. He's well thought out. He's not just a used car salesman out there just throwing, crap against the wall. And so I thought that was insightful. And it's something that, hey, listen, if DOJ's, if they win on this deal, then you're going to have other options like the buy side being able to finance that, or far too many, certainly lower priced home buyers are going to ultimately be left without representation because it'll just be hard for them to afford down payment and buy side representation.
Well, there's a major issue with the VA here, and I think this gets glossed over all the time, that the VA, I mean, I don't know what the percentage is of VA loans that are financed, but they will not allow any buyer side real estate related charges on the settlement sheet. So they can't even pay a commission if they want to on the sheet. So that's something that's going to be really important for a segment of the market that we're supposed to be serving. We've got a couple veterans on our team. We do a good amount of VA business. That's not even talked about during this whole thing, which is a whole nother problem.
And so
I think,
Lisa, go ahead.
I was going to say, I think one of the other kind of sides of it that could come out, just, different kind of vantage point, is we could still, be in a situation where, as listing agents, we negotiate a buyer agency commission in a listing contract that says up to. and it could be blind in the MLS and on the agent to write it into the offer. And so where a seller might say, sign a listing contract at 4%, or sorry, 6%, listing side keeping 4, and the
Or
seller
12
saying, I'm
or
open to
2.
paying
X
whatever,
percent,
right? Just
unknown percent.
right. But then in the buyer agency spot, I could see a world where it says seller will pay up to X percent of, buyer agency commission. It goes blind into MLS so that the co-broking agents cannot see it, but they then write it into their offer to purchase, that the
They have a
offer is subject.
negotiation when they offer to
Yeah.
purchase on that.
What-
Correct. And where the seller could win, I could see that as in a situation where, because I think one of the issues with what's going on is the three of us, I think everybody would agree, we are far more valuable than the agent who's just been in the business for 4 months and is selling their first home. Hands down, I am worth more as a buyer agent, right? And I think one of the slight problems is that that's not differentiated right now. And it's going to put it on that agent to be able to negotiate, get the skills and the learning, just like we've built up over the years, to be able to advocate for what they're worth, as opposed to just being paid blindly based on an offer of compensation. Does that make sense?
That actually makes a lot of sense, Lisa.
Yep,
And
I agree.
so your ability, and right now as an agent, should you not be going through a new negotiation book every single month, even if you're a seasoned negotiator? Absolutely, you should be. You should be sharpening your skills always. You should have been sharp. If you're in the game 30 years, you should have been doing this for 30 years anyways. Sharpening the skills of being a great negotiator, because to Lisa's point, that will come down to the best negotiator will win in those situations. And it's also going to give the seller a little bit of, hey, it's going to be blind going in. I want these buyer agents to negotiate with us on what we're going to pay them. And based on, the competitive environment that's, created by my listing agent or the interest on the property, this number could fluctuate at time of, once you actually put the whole deal together. These numbers can change through that negotiation.
Right. And then I think it takes away this home's offering more, this home's offering less, which I agree with the DOJ is an issue at some level, right? We're going to see it shake out in all of our markets. But I also think that there's a world where it could still be funded by the seller, but onto the buy side and the agent and the consumer to really come to terms with what that looks like. And it's earmarked ahead of time so that, sometimes there is, sometimes there isn't, but all a part of negotiation.
In Inman, Sears also had some quotes, Tom, that I thought were pretty honest. The jury found that we were guilty.
Yeah, I love that one.
At the end of the day, even though our policy and what we might do is right, being a sports guy, he said about himself, all you have to do is look at the scoreboard. We lost. It's almost like he's saying, okay, NAR is not overcoming this L. There'll be some kind of settlement way down the road as they, go through more of an appeal process. He's almost admitting we're not going to be able to go replay that game. The defeat is on the books. We lost. And now the bigger problem is this, DOJ, you guys got it, or we, because he's technically an agent, the president of NAR, Kevin Sears, the new president, got to go and get ahead of the solutions. And it's going back to what James Dwiggins has said in the past, where you got to be ready for that. I mean, he's still the one thing I kind of get hung up with James, and Lisa, you and I asked him the question when we were in California at realtor.com last year, in the second half of last year. I said, but the likelihood of that happening to me is so small. And it seems like he does put a lot of eggs in that basket of where lenders are going to change, where they're going to finance the buyer to be able to pay commission on the other side. I do think getting really good at signing this is a contract business. So we always talk about appointments. How many contracts can you get signed per day is probably a better conversation. How many listing contracts? How many buyer contracts? How many contracts are you signing in this business? That's ultimately getting you closer to a closing.
Kevin Sears had some really interesting comments in the rest of this article. I agree with you. It's all about contracts. Lisa, I mean, I think talking about negotiating things makes a ton of sense. I mean, we've had to do it with for sale by owner sometimes. Maybe there's a way to make this part of a seller's assist, which is already legal. Like there's a lot of options here. Here's one thing that jumped out at me, Byron. Tell me what you think about this. Kevin Sears said that he's a practitioner himself and had a closing this previous week. It was the very first time I used a buyer representation contract because the change it's happening. How in the hell is the president of NAR using a buyer agency contract for the first time right now? Like, I mean, this blows my mind that this is even now. Is this taken out of context? I don't know, but I mean, that's insane to me. If that comment is what it is,
this thing has got to come back to. So you've got obviously Kevin Sears has been somebody who's been in the business a long time, and you have a lot of people who work on trust. They'll work with a buyer and they won't put a contract in front of them until, the very end of the search process. Then they'll put the representation contract in front of them. Different states vary, obviously. But you have people who have built their buy-side business off of trust. When they found a home, then they'll talk about representation, have them sign representation, and then put the purchase and sale together. It sounds like, I don't know, but it sounds like that's what Kevin's talking about there. And then on the other side, and this has happened historically, where you have agents who have made the mistake of saying, they get a call on the phone, somebody who wants to see a house, and they start talking about buyer agency on the phone call, as opposed to setting a strategy meeting, as opposed to setting some time to talk with that buyer. You've had people either trying to push representation too early in the process or waiting too long and letting the deal get away from them at times, as opposed to doing it in the beginning of the process, but after you've had a meeting or two. So people will run over to a homeowner's house that's thinking about selling, and they'll do that without having a listing agreement signed, and they'll go there 2 or 3 times. They'll have 2 or 3 meetings before getting a listing contract signed. But then you've got buyer agents that don't want to meet with a buyer 2 or 3 times before getting a buyer agency signed. What sense does that make? Why would they sign with you? They're not, I mean, very few times do you go on a date if you're single and you get her to come home with you that first night. You got to go on maybe 2 or 3. Okay. And then you might score. So you got to go on 2 or 3 meetings. You got to give them some reason to actually
Byron must have a high close rate is what I'm hearing.
I've been with my wife since 17 years. This is just what I hear from single people. Okay. It doesn't happen on the first date.
I think we're all in committed
You're blushing. You're totally blushing.
His face is red. Look at this.
I could go on a date. I could go on a date tonight and score tonight, but we've been together since we were 17 years old. So
Bobby, can we make that the reel that we post later? That would be fantastic. What you're saying is absolutely right, Byron. I'm going to take this one step further, that people are afraid of this conversation. Oh, they're going to feel like I'm too pushy. This is a normal business procedure. You know what happens when you hire an attorney? You signed a retainer agreement with them, right? Like that's how it works. You don't work on trust the first couple times. And this is a large financial decision. When you hire a financial advisor, you sign engagement papers. I mean, there's a clear contract of what's going to happen. Here's what the fee is. And we do this with listings. Can you imagine taking a listing? First of all, we're not allowed to with the NAR rules. You can't put a listing in the MLS without a signed listing contract. At least that's the case with Bright. So this is where the rules are backwards. And this is where NAR has failed a little bit because, all right, we're going to do this for sellers, but not for buyers, right? Like what sense does that make? And the three of us have been constantly talking about the listing process is the way in so many facets of our business, right? You prospect them, you meet them, you sign them. Like you have a whole process here, right? This is going to be, in my view, for knowledge brokers listening, you want to have a high level buyer side business, which that's a healthy business. You should be working with buyers and sellers. It's going to have to follow the listing process in the future. I don't see any way around it if you want to scale it. And those should be the steps you take. Hey, you have the planning meeting, Byron, right? You ask them if they want to get started. Maybe you show them a couple houses as like a sort of a freebie and a chance to get to know people and build that rapport. But at some point, you've got to say, all right, and this is something we coach our team on, and we call it the loyalty speech. So, hey, Byron, we've looked at a couple properties right now. How do you think things are going? You feeling pretty good about everything here? And they'll either say yes or no. And this is a face-to-face conversation, by the way. This isn't like some phone call or text exchange. This is at the house after you get done some showings. Hey, awesome. So I'm spending some time with you. I'm giving you my insight, my expertise. Here's what I'm asking for from you. I need some loyalty because now we're going to be going out. We're going to be looking at properties regularly. I'm spending time. I don't have any expectation you're going to buy a home. You're going to buy the right home when the right home comes along. So if you're okay with this, I'm not sure if this would be for you, but I'd like to formalize our relationship so you know I'm your person. I know I can count on you, and you're calling me for everything you need. How does that sound? And that has got to be a conversation for people that want to work with a lot of buyers, or you're going to get burned. And if you don't do this, you're basing it on trust. And let's face it, some people are going to screw you over. So this is to me, a must learn script, and you got to do this every time, or the people aren't going to take you seriously.
And to your point about going out on 2 or 3 homes, because if I'm the buyer and I'm going to commit to you as my buyer agent, I'm going to want to go see probably one tour, 1 to 3 homes with you. I want to know what you can point out and what difference you make on those showings of things that I'm not going to see, of maybe different, maybe I'm remodeling, maybe you're somebody who has an expertise in that, and you can add some value in that conversation of a floor plan, a layout, all these different things that are important to that buyer. And I'm not going to know that only from a consultation. So I think it's going to take that consultation strategy session and at least 1 tour, which is just 2 listing appointments. Everybody would go on 2 listing appointments. So that's basically 2 meetings with a buyer on a lot of cases, and then sign.
I treat it like listings, man. Lisa, how many times have we talked about this? Like, I mean, I'm just thinking, like, how many times have we said treat everything like listings? It's such a dialed in process.
Everything. Yep, everything. And I hate to do this, but I got to scooch. I have an 11 o'clock.
Oh, Lisa, we were going to talk about your amazing article on nowbam.com, but maybe we'll all right, bye, Lisa. You can leave.
Yeah, Tom Toole has an 11 o'clock too.
Have an 11 o'clock. So,
Right.
if it's not in your schedule, it doesn't exist, my friends. Just remember that.
I have 11 o'clock that I'm also a minute late for. So I guess we will bounce out. We'll link up Lisa's amazing article, What to Say to On the Fence Sellers, for those of you that are interested. That link is down below. Have a great weekend, everybody. And make sure you subscribe, because we have a monster surprise guest probably happening next week, but definitely
we've
happening
had some
soon.
misfires here. Let's hope
Likely.
he's very sad about the outcome on Sunday. That's kind of my hope for Logan, and I will be saying something to him about that if we get him on.
Likely to happen next week. Logan Moldashami, stay with us for next week's Knowledge Brokers. See you guys.
Bye, guys.